Welcome to This Week in Impact, where we bring you some of the most interesting impact investing and sustainable finance stories of the week, as covered by Impact Alpha. I'm Brian Walsh. It's Thursday, October 24th. I'm joined by Impact Alpha's editor, David Bank, who's in Amsterdam for the Global Impact Investing Network's conference. We'll discuss the GIN's new report pegging the impact investing market at more than $1.5 trillion. News that C3, the Catalytic Capital Consortium, is doubling down rather than shutting down its efforts to expand usage of the investment and financing tool, and a new documentary premiering at next week's SoCap conference on the reconstruction of black wealth. That's all coming up on This Week in Impact. Hi, David.
Hey, Brian. How are you?
I'm well. How are things going at the GIN conference in Amsterdam?
Well, it's winding down. It's been a whirlwind few days, as these things tend to be. People come from all over the world and do deals and meet old friends, make new contacts. There's also some programming, obviously, but I think most of the action is in the hallways as folks are meeting and greeting.
Meeting and greeting. Well, of course, the attendees were met with a really interesting report coming from the GIN to kick off the event. Now, the headline number for the impact investing market is $1.571 trillion. Now, according to the GIN, that represents a 21% compounded annual growth rate of assets under management in this market. That's over the last 5 years. But David, as you noted in your coverage on this, these figures are far from precise. So what are we to make of this headline number?
Yeah, we called it in Impact Alpha 1.5 trillion-ish. Because there are a few fudge factors, and the GIN, admirably recounted its methodology. But there is a certain amount of I wouldn't call it guesswork, but let's say estimation or extrapolation, maybe is a better word, to get to that number. And basically, they take the nearly 3,000 organizations, funds, and asset allocators, and pension funds, and others that they can actually get assets under management, impact assets under management. But then there's about another 1,000 or so organizations that they know are doing impact investing. They don't know exactly the impact assets in those places, and they use a variety of methods, and they try to estimate what those organizations might be. But then there's a final fudge factor, which is that they understand that they may not know all of the organizations that are doing impact investing, and so they top it up a bit with about another 15%. So all of that led to $1.571 trillion, which I felt was a little bit too precise given all those estimations. And I think that over time that will kind of get boiled down, and folks can sort of think of the impact investing marketplace as about 1.5 trillion.
Now, to put that into context, we did some research, and the overall global assets under management industry, it's hard to get a rough estimate, but let's say it's about $150 trillion or so. And that would mean that the impact investing assets under management represents about 1% or so of the overall global asset management industry. Now, that's not a lot, but it's actually important to note that looking back 5 years, the GIN put the market at about $500 billion. And about 5 years ago, the global asset management industry was about $100 trillion. So that means that over the past 5 years, impact investing went from about half of 1% of global assets under management to about 1% of global assets under management. So there certainly has seen a lot of growth in the past 5 years.
Yeah, I think that's right. And the other thing to note is that the growth is becoming in bigger chunks. So the biggest contributors to the growth were large pension funds and particularly insurance companies, which sit on multi-trillion-dollar pots of capital. And even though they're a relatively small number of the specific organizations, they're about half of all of the assets. So bigger institutions making bigger allocations. Another theme at the GIN here was big institutions moving from having kind of carve-outs for impact to trying to drive impact across their portfolios. So I think, whether you quibble with the particular numbers, the direction is clear that things are, more money is being moved and bigger institutions are moving bigger chunks of money towards impact strategies.
So how is that resonating for folks who are attending the conference in Amsterdam?
Well, I think it's kind of becoming a little bit of a, people always talk about impact investing as a big tent. I think it's become an even bigger tent. So, for example, much more attention here to impact in public equities. It's always been the sort of roots of impact investing, always been on the private side, private equity, venture capital, private debt. So now more in public equities, listed, stocks, and then also in fixed income. And so those are, getting a little bit more attention. Climate was obviously the overriding, theme of the conference. But even that, the spectrum of solutions and approaches is getting wider. For example, a lot of attention now to so-called nature-based solutions, reforestation and regenerative agriculture and those sorts of things that both have climate implications, but also have other kinds of social co-benefits, for biodiversity and for communities and other things. So again, bigger tent.
Bigger tent and those nature-based solutions, and when you mentioned the biodiversity, I'm struck that it is coming alongside the UN's COP on biodiversity, the conference that's happening in Colombia this week as well.
Yeah, that was going on at the same time, and then of course it's setting up the COP in Baku, Azerbaijan, around climate, and where private finance for climate will be high on the agenda. So the GIN is kind of the point of the spear of that kind of private finance, and there was a lot of talk about all the kinds of opportunities. I would say the other thread that's come through in many conversations is the impending U.S. election, which goes under the category of political risk, and folks are very keenly aware that things could be quite different, or maybe even quite energized, depending on outcomes in a week or so.
All right, well, to read our full write-up on the GIN report, check out impactalpha.com. There's also a link to it in our show notes. But let's take a quick break. When we come back, promising news on the doubling down of the Catalytic Capital Consortium. David, as our colleagues Dennis Price and Lindley Browning reported, a year ago, the Catalytic Capital Consortium, or C3, was ready to move on and declare success. At a side event at last year's GIN conference, this time was in Copenhagen, leaders of the effort to expand the use of first loss reserves, low interest loans, and otherwise flexible capital signaled that the project was winding down. But C3, as it's known, is opening a new chapter. So tell us, David, about what we've learned about C3's doubling down on their investment in catalytic capital.
Yeah, well, this is a little bit of the inside baseball at some level because it's about the field builders around this idea of catalytic capital. And so this C3, as you said, the Catalytic Capital Consortium, initially was made up of MacArthur Foundation, Rockefeller Foundation, and the Omidyar Network. And they've spent the last few years kind of beating the drum around the uses of first loss reserves and guarantees and various kinds of risk mitigations, as well as just more patient or risk tolerant capital coming in to help make deals work in a blended finance kind of way. And in fact, that the terminology, but also the practice of that has really expanded in recent years, and kind of it's kind of been a rebranding. It used to be considered, concessional or below market or subsidized, and those were sort of downer kind of words. And now it's innovative and catalytic and just smart. And strategic. And so a lot of that has been due to some of the work of the Catalytic Capital Consortium. I should point out here that Impact Alpha gets a sponsorship and some support for our coverage of catalytic capital. So we've been beating the drum as well about all that. And but the initial effort had kind of run its course. As you said, about a year ago, the message was put out that the field should sort of stand on its own and take it from here. Now what they've said is, hey, there's more work to be done. There's more research to be done. There's more sort of best practices to be promulgated and whatnot. And so a whole set of new funders, and interestingly, not just big foundations like the initial ones, but some family offices, the Blue Haven Initiative, which is Liesl Pritzker and her husband's family office, Builders Vision, which has got some Walton family money, and then Kenny Arth, which is a family office of Diane Eisenberg, all came in along with the Lemelson Small and Walton Family Foundation. So again, the field builders of this world of catalytic capital have expanded, and I think the workflow and of the Catalytic Capital Consortium will also be expanding.
So speaking of a bigger tent, so they're bringing in new folks to this effort.
Yeah, and speaking about growth, and in fact of the gin, a different gin report recently estimated that the scale of assets allocated to this kind of impact-first catalytic capital had grown to 21.7 billion. Again, not a big number, but nearly tenfold up from the 2.8 billion in 2019. So folks are sort of getting wise to this sort of tool in their toolkit. And again, it's like, do you want to just be a sort of market rate investor, going with the crowd, or do you want to actually be the investor that helps make the whole deal work? But for it would not have happened. So a lot of families in particular are interested in that. They can then sort of point to what they particularly are doing, and so that's, I think, indicative of why some of these big family offices are getting in.
All right, so David, returning to our earlier story about the $1.5 trillion size of the impact investing market, and now this story about the kind of renewed efforts to support the field of catalytic capital, and your note that the GIN represents a big tent. So how do all the players under this tent, how do they interact with each other when you have the more commercially minded folks who want to continue to win mandates from commercially minded impact investors to the other side of these kind of impact first folks who want to make sure that their capital is catalyzing new investments? How do they all play well together?
Well, that's a great question. And just as an example, we've written about the SDG loan fund, which is about $1 billion or more, and most of that comes from Allianz, the big German insurance company. But they, to get that, these are loans to emerging markets, to small businesses and whatnot, and to get that kind of investment through their own investment committee, they needed a guarantee from, and they found it from FMO, the Dutch Development Financial Institution. And then to get that approved at the FMO, they got a $25 million unfunded guarantee from the MacArthur Foundation. So if you can think about it, the MacArthur's 25 million seeded up to over $1 billion, and so you can see what the kind of leverage you get in catalytic capital. And so that's kind of how the different layers can fit together.
So the, if you will, the impact first versus the finance first folks aren't necessarily in competition. They often collaborate to do more than they could do on their own.
Well, that's the sort of, I think, where the impact investing world has arrived in recent years. Everybody's got different mandates, different investment hurdles and investment guidelines, and they can fit together. And if everybody just sort of knows what their lane is, people can find ways to work together quite profitably and for all involved, and leverage more money for impact, as well as find the returns and the risk profiles that people need for their own portfolios.
Now, is the goal to grow the overall pie of assets under management? Is that is that anybody's explicit goal?
Well, it's everybody's explicit goal for their own fee structure. So all these managers here at the GIN would love to have bigger funds and bigger mandates, and then collect bigger fees on that. And so if they can make their investment propositions more attractive to the asset allocators, to the limited partners and the asset owners, then they'll be have a bigger business of their own. And so the fact that they can bring in kinds of risk guarantees, risk mitigations to help make that equation work, is good for their business, and then hopefully it's good for impact and good for the world as well.
And taking on the legacy financial capital markets,
either taking them on or converting them. So or both.
All right. Well, you can read Dennis and Lindley's article on impactalpha.com, and we also have a link in our show notes. For now, let's take one more quick break. When we come back, we'll discuss a new documentary premiering at next week's SOCAP conference, Equity and Ownership, Napoleon Wallace and the Reconstruction of Black Wealth. David, for the past few years, I've heard you speak during editorial meetings about a special project that excited you in ways few other stories have. For the first time, Impact Alpha has produced a documentary on what could be called the North Carolina model for racial wealth building. So tell us about this new film, which premieres at next week's SOCAP conference in San Francisco.
Yeah, Brian, I've been super excited about this. Impact Alpha has produced its first film. It's a 20-minute video documentary, and it centers on somebody named Napoleon Wallace in Durham, North Carolina. And I met him a couple years ago, and been very impressed with the strategy that he put together around racial wealth building, ways to build wealth in Black communities and Black families, and narrow the racial wealth divide. But what's amazing about Napoleon also is that he's in about year 4 of a very challenging diagnosis of ALS. And so over time, his mobility and his speech have become quite impaired. He's essentially paralyzed. And he is doing all this work now essentially with his eyes as he tracks a tracker on a pad and types out words by moving his eyes. And so that would be extraordinary enough in any event, but then also the strategy that he's working on and the colleagues and collaborators that he's pulled together, merit a film in its own right. So we've woven together both Napoleon's personal story and then this strategy, which we're calling the North Carolina model. These organizations happen to be kind of based in North Carolina where he lives, but they have wider implications, obviously, and each of them are expanding across the country.
Now, North Carolina is interesting in part too because of the period after the Civil War called the Reconstruction, and our own Monique Aiken had a series a couple years ago for us, a podcast series called The Second Reconstruction. And so how does this play into that theme of a second Reconstruction?
Well, actually, people are talking about the third Reconstruction, the second being the Civil Rights Movement of the 50s and 60s. The historical Reconstruction has been resonant for me for many years. It was a period of about 12 years following the Civil War when there was a multiracial prosperity as well as multiracial democracy, and it was sort of put down. There was a backlash as these things happened, but what was remarkable is how successful it really was. And so it sort of serves as a model of what can happen when the artificial constraints on black mobility in particular are lifted. And so in North Carolina, there's an additional sort of chapter. It came after the first part of Reconstruction, and it centers around Wilmington, North Carolina. And I went down there on one of my trips, and I learned about the history there and the very vibrant and prosperous black business districts of Wilmington with black-owned department stores and black-owned newspapers and black-owned banks, and that led to a political coalition between this black business class and also poor whites and who had grievances of their own against the planters and some of the big banks. And they actually had an elected, majority government, multiracial government in Wilmington, North Carolina, which was put down in a very bloody, essentially a coup in 1898. So yes, North Carolina is very rich in examples of a kind of multiracial prosperity that can lift all sectors of society. And Napoleon and some of his collaborators in these organizations are putting together a strategy to do that again.
All right, and so what are the components of this strategy?
Well, Activist, which we've had on some of our calls around municipal finance, was very instrumental in kind of publicizing the extractive practices of many cities around fines and fees, and essentially balancing their budgets on traffic stops and other things that disproportionately fell on their black and brown populations. Another outfit called Partners in Equity, which is helping black business owners buy the commercial buildings in which their businesses run. So the business may be a service business, but the building is a kind of real asset that can appreciate and can be either passed down to heirs, of course, but also can be leveraged for additional capital, for growth capital, or to build up portfolios. And then finally, Napoleon and his partners are raising something they're calling Fund One through something called the Southern Reconstruction Fund. And one stands for ownership and new equity. And the idea there is to seed emerging fund managers around the South, particularly in the bigger metropolitan areas around the South, where there's a large population, a large black population, a large low-income black population, and sort of put together these place-based strategies that take on housing and health and education and small business finance. And the idea is, you can't just do one thing. You sort of have to be able to do everything so that it all kind of works together and creates this kind of mutually reinforcing uplift. So there's a number of others, but the elements are access to capital, ownership, community governance, and essentially, democratizing the economy.
All right, well, I look forward to seeing this film, A Labor of Love, for the past couple of years. Again, that's Equity and Ownership, Napoleon Wallace and the Reconstruction of Black Wealth. That was set to premiere on Tuesday, October 29th at SoCap. Now, we'll have a link to this article as well as an Impact Alpha discount code to save $250 on your SoCap ticket in our show notes. But for now, that's going to do it for This Week in Impact. Thank you, David.
Thank you, Brian. It's been quite a week.
Indeed. And thank you all for listening. This Week in Impact is a production of Impact Alpha and part of the Impact Alpha Podcast Network. Smart conversations by and for impact investing professionals. For more exclusive stories about the world of impact investing and sustainable finance, join thousands of other agents of impact by subscribing. Just go to impactalpha.com/subscribe for full access. If you like the show, please subscribe to this podcast wherever you listen and be sure to leave us a 5-star rating. It really helps other people discover the show. Thanks, as always, to our producer extraordinaire, Isaac Silk. For David Bank, I'm Brian Walsh. We'll see you next week for more Impact.